What's going on, guys? I'm your mentor, Arkhamtrades, and in this video we're going to be talking about supply and demand. I'm going to be covering market structure, liquidity, as well as valid and invalid zones. So make sure you guys watch till the end of this video, because I'm going to be going over it step by step, and towards the end I'm going to give you guys a full trade plan. Hopefully you guys can learn from this video, take notes, implement it into your own trading back test, so hopefully you guys can pass your funded accounts and make your first $10,000 trading. If I could do it, anyone watching this video can do the same, and it does not have to take long. But before the video begins, make sure you guys click that like button. It only takes 2 seconds and it greatly supports the channel. Thank you. First, we're going to be talking about market structure, and there is overall 3 points of structure that we want to pay attention to: a trending market, a reversal market, and a consolidation market. How we validate a trending market is when prices breaking structure to the upside, continuing to see higher prices. When prices breaking structure to the downside, continuing to see lower and lower prices. For every break higher, we create a higher high and a higher low, and for every break lower, we create a lower low and a lower high. So we can see a marketplace broke structure from this previous high, created this higher high, price respected this previous low by creating this higher low, continuing to trend higher, and same thing can be said here. Price broke back below this previous low, price respected this previous high by creating this lower high, continuing to trend lower. A reversal market is indicated with a change of character, shifting from one direction to another. As prices reaching lower and lower prices, we then see a sudden shift in the opposing direction, breaking back above this prior lower high, and then price respects this previous low. As we're seeing this shift from lower to now higher prices, this would validate as a reversal. Same thing can be said here. When price was going higher and higher, then we had this sudden drop with displacement back below this previous low, respecting this previous high for an overall reversal, going from higher to now lower prices. And the third is a consolidation market. This is when price remains in a specific range, going back and forth, higher, lower. Understand that these are conditions that you don't want to be trading in, and the best thing that you want to do is walk away and just come back tomorrow. So next, let's talk about breaker structure, which is simply a continuation of a market trend. So as we're in a uptrend, price is breaking above previous highs, identified as a breaker structure. Had this breaker structure to the upside, price respects this previous low, then we had this other breaker structure to the upside, back up here, price then respects this previous low, then we had this breaker structure to the upside right here, creating this overall uptrend. Then we can say the same for a breaker structure to the downside, where price breaks structure to the downside back below this previous low, and we can see this breaker structure to the downside from higher to now lower prices. A change of character is simply an indication of a market trend changing course. This is when price breaks structure in the opposing direction with clear displacement. So we can see we were in a downtrend going lower and lower, then price breaks above this previous lower high. The key thing that we want to look for is displacement, and we can identify the displacement by these bullish engulfing candlesticks. This displacement breaking back above this previous lower high, this is indicating that price is shifting course from now lower to now higher prices, and as you can see, price gives this pullback, respecting these previous lows from a downtrend to now an uptrend. Same thing can be said right here. When we're going higher and higher and higher, then price breaks back below this previous higher low with displacement following these bearish engulfing candlesticks, continuing to see lower and lower prices from higher to now lower prices. So it's very important that we understand what is a breaker structure as well as what is a change of character. A breaker structure is simply a continuation of a specific trend, breaking back above or below old highs and lows. A change of character is a complete change of that market trend itself. So let's talk about the draw on liquidity. Marketplace is in a condition to where it's pushing back higher and higher or lower and lower. The market will refer back to old highs and old lows as targets. So as we're going lower and lower and lower, price is targeting these previous lows, right? We're targeting these previous lows as it's going lower. That would then be our draw. But then once we identify this change of character where price goes from lower to now higher prices, price is now targeting previous highs and respecting previous lows. So as we can see, as we're going lower, targeting these previous lows, get this change of character to the upside. Now we're targeting back above this previous high, and all the way back up here, targeting back above this previous high. Any trader who was short when the marketplace was going lower and they did not take their profits, they adjusted their stop losses back above these previous highs. And when the market gives this change of character, those traders now become prey. So any traders who put their stop losses back above this high, back above this high, above this high, this is now liquidity for the marketplace to then give this reversal to then seek them out. A sweep of liquidity is identified once price has already taken out a low or a high inside of the marketplace following a change of character. In this scenario, price took out this previous low. Then we get this displacement to the upside. Sweep of liquidity is indicated primarily when price sweeps the liquidity and then sees an immediate rejection. See how price came down here and then immediately started to push higher? That's the type of signatures that we want to look for, indicating that price simply just came here to take out these lows, and then once it took out these lows, it's now going to take out previous highs. So we get this sweep of liquidity, it spends a little time below this previous low, followed by this immediate rejection, takes out this previous high, giving this change of character, reaching back above higher and higher prices, taking out previous highs. Now that we have the market structure plus the liquidity down packed, let's go over the supply and demand framework step by step. First, we want to identify a liquidity sweep. Price has to take out a level of liquidity where we can see price take out an old low or an old high, followed by an immediate rejection in the opposing direction. So in this case scenario, price came up higher, took out this previous high, followed by this immediate rejection to the downside. Perfect. Then we want to identify a change of character or a broken structure. As we can see, price breaks structure to the downside, back below these previous lows with displacement. Perfect. Now we want to identify our premium to discount zones. Using a Fibonacci tool, we anchor from this high to this low and we get the 50%. Anything above the 50% is referred to as a premium level, and anything below 50% is referred to as a discount level. We want to be shorting inside of a premium level and buying inside of a discount level. So as price comes back into a premium level, we want to then be looking for shorts, and we can then identify our validation zone where this last up close candle is referred to as our supply level. So as price comes back up into the supply level, we can then frame our short entry, reaching back below lower prices. A pro tip is when we have smaller zones, which in this case, this is a lot smaller zone, we want to anchor it from the wick to the wick. In this case, we have a much bigger zone. We want to anchor it from the body to body and pay attention to the 50%. We came lower, took out this previous low, followed by this change of character to the upside, breaking back above this previous high. And then we can see price coming back down into the same demand level. At that 50%, we can then frame our entry, stop loss back below that demand zone, reaching back above these liquidity pools for at least a 2 to 1 R. Sweep of liquidity, breaker structure to the downside, comes back up into a premium with a supply level, reaching back below lower prices. Sweep of liquidity, breaker structure to the upside, coming back down into a demand level in a discount, reaching back above higher prices. And last but not least, we want to be looking into our trading plan where we want to be focusing on time and then price. The specific times that we want to be trading is London session, New York session, and London close. London between 2 to 5 a.m. EST, New York between 7 to 11 a.m. EST, and London close between 11 to 4 p.m. EST. And then price for the higher time frames like the H4 or the H1, we want to identify structure plus pools of liquidity and wait for them to be swept. Then on the lower time frames like the 15 minutes, wait for a break of structure or change of character, then identify a supply or demand zone inside of a discount or premium range. And then last but not least, take 1 to 2 trades a day, aiming for at least a 2 to 1 R. And if you guys want the full PDF, I will be posting it inside of the free Discord, as well as inside this free Discord, we do have my brother's course, as well as my course as well. And we do have daily live analysis. This morning we had a live analysis at 9 a.m. anticipating price to come into this level, seeing a drop lower, and around 10 a.m. we can see price came into that level, saw that drop lower. So every single day, free analysis, weekly outlooks, free course, plus the PDFs, as well as a community of traders sharing their trades, learning from both me and my brother. And if you guys want access to all of that for completely free, it's going to be the first link in the description. That's the Spark Train community. Click the first link in the description, join the Spark Train community, and I'll see you inside. At EURUSD here on the 1 hour time frame, and the first thing we can take note of is the overall market trend. We can clearly identify that we are in a downtrend with price creating lower and lower prices, breaking structure to the downside, and now we have this low as our draw on liquidity, because right now we are in the pullback phase. But once price finds resistance at this level, this would then be the area the marketplace would most likely see. And just before 2 a.m. opens up here, which is the London session, we want to take note of this liquidity sweep. So we can clearly identify that price has came higher into this previous high, taking out this level of liquidity, followed by this bearish engulfing candlestick, breaking back below these previous lows. So we have this liquidity sweep here plus this breaker structure on the 1 hour time frames. So on the lower time frames, if we can see price pull back into this level of premium, we can then frame our short entry reaching back below lower prices. And we can also identify this 1 hour level of supply above us, which is a heavy resistance level. So we can see price come back into this 1 hour level of supply instead of a premium. This would offer a great opportunity to take the market short, reaching back lower. Coming down to the 15 minutes time frame here, we have that 1 hour level of supply, as well as we do have this breaker structure. Price has came higher, swept this previous high, broken structure to the downside. We can identify this previous low right here as our draw on liquidity, as well as we had that overall low all the way back down here as the final draw on liquidity to reach back down into. The price did come back into the supply level. It was inside of a overall premium. So we had that liquidity sweep, that change of character where price created this double bottom, price came back into a premium in this 1 hour supply zone, framed the short entry, reaching back below lower and lower prices. And if you're a trader that does scale into your positions, after price tapped into this level of supply, we did see this drop to the downside, creating this last up close candle as well, which you can see price has come back up into to then see this drop lower. So what you could do is you could short at this 1 hour level of supply, look at this breaker structure to the downside. When price broke below this previous low, we got this breaker structure, this 15-minute level of supply you could add to your winning position, adjusting your stop loss back above this previous high, reaching back below those lower prices. This level of supply as well, which we can see price come back up into it before then taking our final take profit. I'm someone that does scale into my positions, so when I get a very solid entry at a specific high or a specific low, I like to add to my winning trades, maximizing on my winners. It's not about how much you're right or wrong, but it's about how much you make on your winning trades. And when you catch a really nice trade, it's important to maximize on it. So that's gonna be it for the video. I hope you guys got a lot of value from this video. Make sure you guys do hit that like button, subscribe if you haven't already to further support the channel, and click the first link in the description and join the Spark Trading community. It's completely free. I share trade breakdowns, analysis, and much more, and I communicate with all of my students as well as my brother's students as well, which you guys can get access to PDF and the free course. That's it on my end. Hopefully you guys took a lot of notes and hopefully backtest this, implement it into your own trading, and pass your prop firm accounts. I'm Arkham. Be safe, guys.